Martin Smith from eNCA Capital has been watching those markets and joins us now to unpack the day that was. So the market was slightly in the positive today at some stage, but it's ended 1/3% in the green, as I've just mentioned, Martin. But globally, there appears to be a lot of tension building on Russia's strong stance with and over Ukraine and its allies on either side. I mean, where is this going, and what are the near-term implications for the world economy as well as markets?
No, you're absolutely correct. It's a bit of a mixed bag from the local market, but we've seen the same thing globally. I think people are looking for some surety of outcome, whether it be economic data points or the war or whatever it may be, I guess. I think people are just feeling quite uncertain, although we did have a little bit of a bounce the last 2 weeks. With regards to the war, I think for all intents and purposes, it looks like it's going to continue. Obviously, that's very negative from a humanitarian perspective. But largely from an economic perspective, inflation from food and energy prices coming through, which can obviously then also impact interest rates and the like. So negative all around. It doesn't look like it's got any chance of slowing down anytime soon.
Let's look at the local unit, Martin, before we get into some company updates. That's holding up fairly well against the US dollar. What would you say are some of the biggest influences there?
So I think, yeah, you're correct. I mean, our rand is stronger than it was at the beginning of this year. Our local market is up slightly since the beginning of the year. But then you look at what offshore markets have done, I mean, down in the region of 20-odd%, depending on which index you look at. But I think the biggest driver for us has, one, been the value element to both the rand as well as our local market, but also the commodity side of things. We're a commodity-driven index in a commodity-driven country. So that's obviously been very beneficial to us from a rand and from a local equity perspective.
Yeah, no. Okay, some company updates now. So Glencore, we saw those stories that were coming out about it being a criminal syndicate bribing most of the countries that it operates in to be the conglomerate that it's become. But that share price is up over 40% roundabouts this year. And that's despite all of the allegations that are going up. Is this a story of investors not really caring where the profits are coming from? Or is it something that's still being digested?
Well, I think let's look at it in two parts. So one, operationally, the business is the biggest driver of it is copper, and it's a very kind of positive, or has a very positive rhetoric around it. It's a green commodity and the like. This business is very, very cash generative at the moment, looks incredibly cheap from a multiple perspective, and is also looking to pay back shareholders quite a bit in buybacks and dividends and the like. So from a purely shared fundamental perspective, it looks very, very positive. You've obviously got these kind of legislative and allegations kind of things happening in the background. Some of those have been cleared out. They've got a new CEO, and I think the talk is that they're going to be a new business going forward. I think investors will wait to see, but I think on the balance of probability, I think investors are looking at the underlying fundamentals of the business.
And then we move on to Harmony. I think this is a really good direction that it's taken, the huge solar project that it's announced today. I mean, your thoughts here on the significance, and really if this is a direction that other companies around the country should be taking.
Yeah, I completely agree with you. Very positive bit of news out of Harmony. Electricity is one of the biggest costs involved in their business. They're also predominantly South African based. So if you look at issues with Eskom and the like, it's also giving them a little bit of surety of outcome from an energy perspective. It'll be cheaper for them. So massively positive for the share. And I think we might see other companies follow suit. Does it change my thesis insofar as wanting to hold gold shares in a interest rate hiking cycle around the world? Probably not, but does it make it more attractive in the sector? Yes.
Absolutely. Martin, as always, thank you very much for your time this afternoon. That's Martin Smith from eNCA Capital there, bringing us your very latest in your business news. So, Sally, I'll be back in the next bulletin with some more updates. I'm going to leave you to continue to steer the ship.
Thank you very much. Are we continuing with our transport metaphors, are we?